Just to frame this discussion, I guess we're going to talk mostly about Bitcoin here, but as you often say, Bitcoin is, the big daddy of the crypto and DeFi world, and what happens there, filters through to the rest of the price action in various other sectors. So I guess the comments that you're making are Bitcoin specific, but they can be applied to a lot of the other recommendations that we've made throughout the past year. So I guess just keep that in mind.
Yeah, exactly. Bitcoin leads the market. So if Bitcoin's on the way up, other things are usually doing well and vice versa. So you really need to focus your attention on what's happening with Bitcoin first, because that will tell you more about the market than anything else.
So we had a 40%, roughly 40% top to bottom correction, which, if that was the S&P 500, the central banks would be stepping in immediately. But it is Bitcoin; it happens quite regularly. Do you want to give us a bit of background on maybe where that selling kicked in, and then I know you want to look under the bonnet a bit and show us what's happening on the exchanges as well. So I'll let you get into it, mate.
Yeah. Okay. Yeah. So like as you said, we had a really big dip from around about $69,000 as a high, and we've touched just over 32,000 on the way down, which, as you said, in any other market would have people baying for blood and regulators jumping in and central bankers printing money nonstop. And with crypto market, that doesn't happen, and that is not a weakness. This volatility is not a weakness of crypto; it's actually a strength, because it basically exposes any weaknesses in the market. It shows who's in it for the long term and who's in it for the short term. And it gives opportunities as well to people who might have think they've missed the boat to get in at a better price point. And I know in our, one of our other services, you and Murray took advantage of that for some of the subscribers on that. So that was a great move. But I'll be perfectly honest and say, look, I didn't expect it to fall from 69,000 all the way back to almost 30,000. And part of that is probably just a function of me being in this market for so long that I always think that this is the time that the market truly gets what I'm seeing. And then I've realized that there's some in the market that see that, but there's a lot of people that still don't understand that. And I'm not talking about your ordinary investor. I'm talking about fund managers that I speak to, professional investors, people that have been in money for a long time, central bankers. They still don't understand the nuances and the unique attributes of Bitcoin to a large degree. And within that sort of, free market for money and all these ideas coming, there's people saying it'll go to zero and it's all a fraud and it's all a Ponzi. And on the way down, that causes people naturally to get emotional and to panic sell and do other things. But underneath that all, there is a base of people that understand this to a large degree, in my opinion. We call them the hodlers, or the holders of last resort. And what you find in these cycles is that the holders move up in price point every cycle. So a lot of people come in on a bull market, and then as prices crash, it sort of wipes out the people that maybe weren't in it for the philosophical reasons, or maybe just in it to try and make a quick buck, and the crash wipes them out. But some of them come here to stay. They go down the rabbit hole, and they find out why open source, global, decentralized monetary system is actually a big deal, and they stay, and that pushes the base price of hodlers up. And that's why we didn't probably even touch 30K this time. We actually, touched 32 very briefly, and then probably 35 was a base. And in the space of 5 days, we've moved from like 36,000 all the way up to $44,000 pretty swiftly. You would never see a recovery that swift, probably in any other asset class, because you'd have a bunch of people that were just waiting to sell. But in Bitcoin, I'll try and show you on this chart I've got in front of me now. There is a very large amount of people that are pretty comfortable with this volatility. They've seen it before and they will see it again, and it's not shaking them out. And I'll just, if you can see this chart in front of you now, this is a chart that I get from a company called Glassnode, who track on-chain data. And what they're showing here in this orange line is the percentage of Bitcoin held on centralized exchange addresses. This black line here shows the Bitcoin price, and the price is over here, and the percentage held on exchange is over here. Now, what you can see here is very interesting. It shows you that since sort of mid-2020, the amount of Bitcoin held on exchange addresses has been falling fairly rapidly, fairly steeply. And that corresponded with this black line rising from the panic selling of the COVID crisis in March 2020, rising all the way, from $3,500 at one point, all the way up to $57,000. And you can see that inverse relationship there, which is very interesting, because what people are tending to be doing when they move the Bitcoin off exchange is they're not traders. They're not trying to get in and out. They're moving their Bitcoin into self-custodied wallets in a large degree, which is what we call cold storage. And that is more of your Bitcoin investor, someone who's in it for the medium or longer term. And they're not going to leave their Bitcoin exchanges because that's a risk. Exchanges can be hacked and exchanges lose funds. So you can see the more people are taking it off exchange, the less Bitcoin is available for other people who want to get in. And that causes the price to rise. It's just a simple supply-demand equation.
Yep.
Now, a couple of interesting things to point out in the last 12 months was that we had steep falls back in May 2021 last year, where the price fell from, around 60,000 down to around 30,000. And the price did look fairly weak at that point. And I remember there was a lot of people panicking. Even some longer term crypto holders that I know were panicking. And you can see that reflected in the amount, this orange line here, which is the amount of Bitcoin coming onto exchange addresses. You can see that rose very sharply. So that's a bunch of people that were worried that this fall was the start of a new bear market, and they were moving their Bitcoin back onto exchanges to trade presumably back into dollars. And you can see that process leveled out. You can see there was a bit of a basing level here, and then it fell sharply. So suddenly a bunch of Bitcoin came off at an exchange, which suggests to me that some large buyers were using that dip as a point to load up. Yep. And you can see since then the amount of Bitcoin held on exchange has fallen, and it's now at 3 years low. And what you can also see is that in these recent price falls from November through to January, we didn't see anyone panicking. We didn't see this orange line spiking up again because people were worried that this was a new bear market. You can see actually most people were still using these dips to buy in and take their Bitcoin off exchange addresses, which sort of explains why this recovery so far has been so fast, because there was never any large amount of supply for a big buyer to come in and soak up. They sort of had to buy as fast as they could and then chase the price a little bit higher. So I think that's a really interesting that you won't see in much price analysis, but using like the on-chain data, you can see behind the scenes and see that kind of behavior. And this is one of the things I look at when I'm analyzing the Bitcoin price. I don't think you can analyze it in isolation from this on-chain data.
Hey, just on that, to what extent do you think the Bitcoin price is now influenced by Bitcoin futures? And I know there's a couple of ETFs that have come out, and presumably they probably use a bit of the futures market in order to manage their positions.
Yeah.
So that chart there that you're showing, that the 40% fall we've just seen has had no real impact on, I guess, the holders of Bitcoin. No one's really panicked to put their coins back on exchange to swap back into dollars. Do you think there's a correlation there to the futures market growing and becoming a bit more prevalent and therefore being dominant on price?
I think that's definitely a short-term factor that's having more of an influence. So like you said, there's an increased paper market for Bitcoin, which means people can sell it short without ever having to, interact with actual Bitcoin. And the other correlation that sort of occurred over the last month or two was the correlation to the falls in the NASDAQ, in the technology index. There was the macro backdrop of central bankers are going to raise interest rates. That's going to cause a risk-off thing in the more speculative sectors like technology, and as Bitcoin's technology. And actually, Bitcoin makes up part of a bunch of technology funds as well now. So there is a natural sell-off that occurs from that side of the market as well. So I think all those things have a short-term influence, including the futures markets and the paper markets. However, there is a source of truth that investors can look to, which is this on-chain data. So it can only have an effect for so long. You can only sell off. Like, it's why even in the last week, you've seen a bit of a decoupling from Bitcoin from the NASDAQ. Bitcoin started rising on a day that the NASDAQ kept on selling. And I think some critics try to say that Bitcoin is one thing. So it's a risk-off asset or it's a technology asset and expect the correlation to be perfect. Or gold, for example. And it does have some of those attributes. And for short periods of time, it does seem fairly correlated with some of these things. But when you look over any meaningful time frame, like, half yearly or stuff like that, you can see those correlations tend to fall apart. So it's like a short-term narrative that drives some trading behavior. And in the short term, yes, traders drive the price. but ultimately it'll be the fundamental investors that drive that long-term price, because we've got sources of truth like this that we can't they can't be hidden. It's not like, for example, the gold market. I think we've talked about before. There's a huge paper market for gold. Could be like 100 times the size of the gold market, and no one really knows where the gold is or who has it. So no one knows how that paper market is affecting the fundamental gold market. Are other people selling or buying or using it? Whereas with Bitcoin, because it's on chain and in a transparent ledger, we can see to some degree what effect those short-term price movements are having on the fundamental demand. So that's a very different thing to the other asset class.